Hi guys, this is Matt from Optimus Futures, and I missed you guys. I haven't done a video in quite some time, so today I'm going to make a video about trading odds. As you know, I make videos when I think I have something that could be potentially of help to you that others do not cover, or at least I don't see them cover it. So today I want to explain trading odds and math. Again, you don't have to be a math genius to be good at trading, but it definitely helps understanding probabilities and just a little bit of basic math that you have to apply in your trading. So to illustrate the point of odds, I'm going to use an example here. I have two jars over here, okay? One jar has a total of 10. And by the way, if my eyes just move up a little bit, that's because I'm watching myself in a video to see if everything is clear and if you can see everything. So I'm sorry for the distraction. So again, there are 10 Hershey's over here, and there's 100 Hershey's over here. There are 2 Hershey's over here out of the 10. So there's 2 silver Hershey's, and there are 8 purple Hershey's. Over here, you have 85 purple Hershey's and 15 silver Hershey's. Okay, so here's the question. The question is, if I blindfolded you and I give you an option to choose each one of those jars, either one you want, and in order to pick for a prize winner, you have to pick a silver Hershey. So again, in order to win, you have to choose either this box or a jar, and then I blindfold you, and then you put your hand inside and you need to pull out a silver Hershey. So which one would you choose? Well, if you chose this one, it's a mistake, and I'll explain. There are 85 purple Hershey's and 15 silver Hershey's for a total of 100. Your odds of choosing a silver Hershey is 15%. Over here, you have 2 Hershey's in a group of 10. So you have 20%. So this one represents higher odds. Now, why did I use this example? Majority of the people would choose this because it has more Hershey's, right? But the right one is to choose here because you have better odds. So you have to understand that you have to go for trades that have better odds. And the reason I use this example is also to illustrate that risk and reward is not intuitive. It's not something that comes to the mind right away when calculating risk in life. So a lot of us use intuition, but intuition cannot overcome math. So I'm here to talk again about the math in trading. So here you have better odds, and this is what you should look for. You should look for trades that have better odds. Let's develop this further. Let's talk about risk management, okay? If you have 20% winners and you have 80% losers, that means that the 20% losers have to overcome the 80% losers. It means market move plus transaction costs. And as a beginner trader, that's the challenge. The challenge you have is to recognize the good patterns and the good setup. Again, there are no perfect setups, and I know that sometimes you will come across literature online where there are certain educators or people or discussions where they say that they can get to a point of 80 to 90% setup. It's nonsense, okay? I'm just being polite. It's bullshit. It doesn't happen, and it's very hard to achieve something like that. In paper trading or in hypothetical trades, those are trades that are easy to show in hindsight. In real life, in the midst of action, it is extremely hard to get to that level of sophistication of choosing 80 or 90%. But let me focus on real examples where beginner traders in the early stages, they have to go through the phase of recognizing what's a good setup. So essentially, they will fall into this category of 20% or lower, in my opinion. And this is where basically experience and the number of trades that they do, and if they make the effort, and obviously you're the trader, if you make the effort to learn from past mistakes, then you will start increasing your odds. Okay, so here you have 20% of winning trades. Let's assume that the silver one represents a winning trade, so you have 20%. Your goal is to go from 20 to 30 to 40 to 50 and so forth. And I'm going to go over those numbers, right? So at the 20%, as I mentioned, if you were just able to pick 20%, which is low, of course, right? But if your trades that trade at 20% can overcome the losers, right? If you know how to use appropriate risk management, even 20% would beat the hypothetical that people are mentioning out there of 90% if the 10% kill all your trades. So you know how you always had that one trade that killed your account, right? Or killed that day, I shouldn't say the account, but just kind of, was really, really bad, and you let it run and you just destroyed all your gains that you've done. It happens, again, you learn from your experience, but that's exactly when risk and reward come into play, right? So let's say that you increase your odds to 30%, to 40%. Now you also have to apply the right risk management. Let's say you get to a point of 40%, right? So now the 40% that you make has to overcome the 60% of the time that you lose. And you can potentially do it if you have the right risk management and the right plan. And again, it can potentially come with experience. And I say the word potentially because unfortunately not everybody will enjoy this benefit. Some can and some can't. I hope you can. And again, it will come with a lot of effort, and how much effort you put into trading will obviously dictate your success. So let's go to the next step. Let's assume that now you are going to the 50% level, okay? If your odds are 50-50, right? 50-50, it means that if your winners are just a little bit higher than your losers, you're already making, just by sheer numbers. So let's say you make 60%, so 50% you make 6 points, and 50% you make 5 points, right? I'm not count. Let's assume that the points include your transactions cost as well. So now just the 6 points versus the 5 points. Just by sheer 50-50, you already have a 1 point advantage. And this is statistics for you. It really, it really makes a big difference as you move even in smaller increments, okay? Let's assume, okay, that you have a lot of experience now and you really studied a lot and you have a lot of samples that you can use, meaning you've been through a lot of trades. And let's say hypothetically you increased it now to 60%. 60% winners and 40% losers. Now, if your winners and losers are the same, but you have better setups and you have more winners, you are making so much more for every winner that you for every single loser that you have. And that is incredible. And at that point, if you can minimize the losses of your losing trades, which means you get out of them faster, you recognize them faster, now the winning trades have way better odds of making a lot more than the losers. And then you can start increasing your trading. Then you can start increasing your trading activity. When you're at the level of 20% versus 80% losers, this is where your transactions should be slow and in the beginning. And in order to learn, you don't want to trade a lot because you're going to pick up a lot of losing trades, right? And until you recognize as winning trades. But as your odds are increasing at that point, and again, this is just my opinion, you could increase your trading activity. And this is what I wanted to tell you about trading odds, right? So recognizing the odds, recognizing the statistics, recognizing risk management, having the ability to cut your losses short, All those things I know, easier said than done, but at least now you know what to work with. And when I talk about trading setups, I just wanted to tell you that trading setup can be anything. It can be occurring on a chart, it could be occurring on a dome, it could be occurring on order flow or any other device. Now, one way to improve, again, in my opinion, to improve your trading is to go through market replay, right? So on our platform on Optimus Flow, we have a button for market replay. On market replay, you basically, when you trade throughout the day, you have the ability to go back and actually go over your trades and see what the setups that have occurred in the market and see what you have done and basically make a decision, if you acted right or you were impulsive or something else happened or you didn't recognize the pattern right. So going over your trading is fantastic. It's a really good thing, and it gives you insight into what you're doing, and you're actually doing homework to improve your trading, and hopefully that will also increase your trading probability. So on that note, I wish you well. I just want to remind you that there is a substantial risk of loss in futures trading. Past performance is not indicative of future results. And trading is just hard. It's a hard profession. And you need to make a lot of effort in order to become very educated. And you need to focus on things that potentially help you to become successful at it. And in my opinion, again, trading probability and understanding trading probabilities is one of them. I wish you and your family safety, all the best, and until next time, and hopefully next time you'll see me shaved. Maybe, I don't know, but all the best. Take care. Bye.